And we're back with WMT, New York Stock Exchange, Walmart. Let's have my margin here, my black margin, and I'm just going to zoom back all the way to like if it was back in July 2009, August. And back then, what would I have done? I would have traced out my support lines. Maybe there's a furthest one here around the 46 level. And there's a shorter term pattern here at the 48 level. I have some support, some resistance here around the 59 level. And shorter term pattern here. Maybe here at the 56.11 level. So those would be my my breakout lines, and let's see what happens over time. Oh, right here, candle breakout above the breakout line, measure move top to bottom of the sideways channel. Let's put that arrow here. Copy parallel line. And yeah, there'll be a breakout here. What I don't like here is I have a concept of walls is a previous resistance turn support or support turn resistance. And we're going to run into a congestion here area. So the price action might slow down around the $50, $60, $59, $60 area. I always, when I run into that, I always give a second look to see if there was, if I got greedy here in my pattern selection. And the launching pattern, maybe it should have been more conservative. Should have been maybe this smaller one here, this tighter range. And let's just see what target that would yield. Copy parallel line. And yeah, this target is would hit in this congestion area, and has a higher probability of reaching that target than this one that has to go right past through. We'll keep going, see how that resolved. Might have reached the first one, and then after that, maybe the second one. Who knows? Let's see. Let's move on. November. Oh, okay. First start. So that target is reached right here, and the price action is fighting through the 61 area. And the price action, you see, right here. That's the effect of that resistance right there. And doesn't mean it won't go through. It just means that there's some chance for some sideways action. And there we go. So it took one. That first target reached its target, then you would have been out, unless you have chosen that second target. And then we have some consolidation right here at the 58 level support, and get some resistance here at the 61.90 level. Measured move for that breakout has already been attained. Right there in that candle. So the risk to reward is negative, right? You enter here, sell stop, I put it under the bottom of the monthly candle, but you've already attained your target. Lots of breakouts. You could have probably played this maybe on the weekly. Shorter candles on the weekly to get to there. You could have had a weekly candle. Let's just go see if this would have been playable on the weekly. I just don't like playing weeklies and dailies, daily candle charts, just more whipsaws. I'd rather wait for the perfect breakout on the A++ on the monthly candle chart. And here is the weekly. And if I just gonna scrunch that down, where are my lines? No lines. I have to zoom back. Oh. All my lines disappeared. All right, let's go back. Maybe I have to zoom back even more. Okay. All right. Bear with me, guys. There we go. Okay. So this is the weekly candle chart. And if I just remove all those crazy candles. See, weekly, you have some noise above. This is all under the wicks of the, these are the wicks of the monthly candles. You could have had one false breakout here, then it would have been triggered back, unless you would have declared this as your, maybe as your resistance. Then you would have been okay. And after that, even here, the breakout's pretty violent, so you might not have been able to have a good risk-reward ratio because you would have hit your target already. It gets a little complicated. It doesn't have to be. It's good to think things through. And just like waiting for the good setup before going in. All right, let's remove all those candles. And yeah, this is some crazy candle. Move down. Okay, there we are. So target reach. And even that more aggressive target, let's say you would have entered based on this this bigger pattern, which lasted 2009, a few years, 2009, 2011, you would have eventually reached it 1, 2, 3, 4, 5, 6, 7 months later. All right, so now we're out no matter what. Either that target, they're all reached. And we're just going to wait for another pattern to tell us what to do. And here we go. All right, here we go. We have some support resistance here at 75. And support hasn't been clearly identified. Maybe here. I'm going to wait for a little bit more candles to see if that's the support. And indeed it is. So it's supported here. We have a 1, 2, 3, 4, 5, 6, 7, 8, 9-month consolidation pattern. And you have a close above the breakout line. Applied target would have been 82. Let's move on. Oh, and you would have been triggered out. So either I misread the move, misread the pattern, or that's just, it just happens and you can't get them all. See if there was a channel. I keep forgetting. There's always always go back to the RSI. I like looking at the RSI to see if there's some divergence, and there was. Let's back up. Was divergence back there? Exactly at that candle. Yeah. So you see there was bearish divergence, not A++. There's a pattern. It's a classically chart playable, but is it risk to money reward ratio playable? Remember, we're not playing classical chart game. We're playing the risk and money management game. The classical chart is just a means, a mechanic where we could have entries and exits and be able to apply our protocols. That's all it is. If I could have applied the risk and money management protocol to playing poker, pot odds, the cards I have, the cards left, the cards on the table, same thing. It's that's pretty much how it is. And the divergence here, not A++. All right, more consolidation. And another pattern here. Conservative target would be, add that to the breakout line. 184 level this time. And we have divergence, slight divergence with that arrow, this peak to that peak. Yeah, there's some bearish divergence here between price action going higher, but the RSI refused to go up, not A++. Let's see what happens. Oh, it goes back down. RSI saves the day once more. And that looks like a big formation right there. Is this the pattern I should be looking at? Maybe that was it. I know there's a lot of slants in in a lot of classical chart patterns. I just don't give them as much value as a resistance or support as much as a horizontal line. Doesn't mean the pattern isn't valid and you can't play the breakout, but and if this would be a descending triangle, usually it would break out on the other side, but you could have a breakout on the upside. Sometimes my brain just doesn't see them. And is there divergence? No divergence. Higher high. But the target's already been reached. So could we have played that? Here's the high to bottom. Add it to breakout line. And in one swift candle, you're almost there. Unless you would have used this support here. When in doubt, always use the tighter pattern, the closer pattern, just to get in. And that target would have been attained already. But it's so fast that on a monthly candle, like I couldn't have played it because of the risk to reward again. Enter here, and the target's already reached. But it's good to observe the action. All right, let's move on. And you would have been triggered out here in this candle right there. If you would have taken this pattern here. Moving on. All right, and Walmart traces back down. Stop formation here. Oh, is that a breakdown below the breakdown line? It looks like it. And how would we measure that? Use this one here, which has to pass through some congestion, some support here, some resistance, some support. Not optimal. Or could have used a shorter target out of this tighter range. Oh, so many arrows. I know it gets messy, but guess a little bit that's what my brain is. This target right before. And we have some divergence. No divergence of here. Lower lows. Whoa. All right, let's just see how that pans out. And yeah, so it did break down. Even that larger target was reached, the shorter target reached, and it went all the way through that congestion area here, that 5 months consolidation of resistance and support. And now it's almost back to previous important resistance turned into important support right here at the 56 level. Right there, extend the line. And we're out. Our targets are reached, and we just have to wait for another pattern. Bounce off that line. Some more consolidation. Now going to hit that important support, now turn resistance at the 73 level. Extend that line. And where are we at today? We're still ranging. Oh, okay. There you go. Something happened here. Extend. Intermediate closer launching pattern would be right here. Measured move. Let's see what happens here. And target reached right here. You would have entered here in this candle. Sell stop here. Profit stop here. 1 month in. 2 months in. And you've reached your target at $80. And you're out. Lots of action with Walmart. I'm not saying I would have played all of them because I'm looking at so many other stocks, Forex, and futures that I could have been probably in a few in other A++ setups right now and not enter here. And some more sideways action. Maybe like that. Target was reached in one candle, and now we're trying to test again some important resistance right here. Oh, bam! Blasted right through that. All right. Here's where it gets tricky. We have the... Is this the pattern? Oh. Draw bottom to top. That's a very impressive, nice target here. There's not much. I would have liked to have a consolidation launching pattern here. It probably is on the weekly. But remember, on the monthly, it incorporates, each candle incorporates four candles of the weekly, and that reduces a lot of patterns in action. All right, breakout candle. This is my risk. I would enter here at 97, put a sell stop here at 87, risk 10 to win 97, to win here at 1, 2. So it's a 2-to-1 risk ratio. Not bad. If the pattern would be A++, do we have RSI divergence? From this peak to here, no. Higher high, higher high, higher high. So all these peaks to this peak, if this would be a peak there, this to be classified a real peak, we need a red candle right beside it, and then you know that that was a top. All right, no RSI divergence right now, and we said we'll play this. And what's happening? Yeah, there we are today. So right now, somebody could have entered here this pattern, saying that this is a breakout, and I'm jotting along to my target. Whew. All right, guys, that was a tough one. I'll just leave it at that. I'm going to set my alerts in case of an eventual test, breakdown and test of that support line here. Or I'm just going to set an alert here at the target and come back to Walmart once that target is reached. In the meanwhile, any sideways action will just be that, sideways action, consolidation. And I could come back down to this, maybe another alert here. I put a lot of alerts, and after a few candles, the chart morphs, and these alerts, they might get triggered at the support or resistance level. And I just come back and redo all of this, redraw some lines, and see if I get to apply my risk and money management protocols to this instrument. All right, guys, thank you very much. See ya.